Bitcoin price action this cycle is deviating from all prior cycles, but that's okay because each cycle is different, right? But what year is it likely rhyming with and not repeating with? That's what we're going to look at in today's video. Hello everyone, my name is J1 General and welcome back to another cryptocurrency video. If you like this type of content, make sure you hit that like button, make sure you hit that subscribe button as it always means a lot to me. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get a nice discount off your next purchase. So without further ado, let's begin with the video. So, Bitcoin price action. Why is it deviating? So we must understand why is it deviating from prior cycles. What is the cause for this confusion within social media or within the charts to suggest why the Bitcoin price is deviating from prior cycles? And that is because of this elusive 618 Fibonacci. Yeah. This elusive 618 Fibonacci is what is causing headwind within investors and within traders within the cryptocurrency asset class because, and I know you've probably seen this before, especially if you do watch my channel and if you watch other individuals' channel, is that the Bitcoin price never breaks through this 0618 Fibonacci, especially before the Bitcoin halving. Yeah, the Bitcoin price has never broken the 618 Fibonacci before the Bitcoin halving. If we go back in time in history, yeah, you can see that the Bitcoin price did not break the elusive 618 Fibonacci until after the halving. Yeah, so in 2020 the halving was in March, April. You can see that the 618 was not broken until November of 2020 right here. The price was rejected by the 618 in mid 2019. Yeah, in mid 2019 the Fibonacci, the 618, rejected the Bitcoin price. There's a lot of common themes between 2019 and 2020 which we're going to look at in this video and look at what price action is mimicking the most, because 2019 and 2020 is what individuals are referring to the most. We're going to look at those and we're going to look at a couple of metrics as to why and back it up with some evidence. But firstly, let's look at the Fibonacci yet again. So if we take a look at the cycle before that, the 618 Fibonacci was not broken until December 16. Yeah, December 16, which was after the Bitcoin halving. So in prior history, the reason why everyone's confused right now is because price action now has broken the 618 Fibonacci before the halving, but in two cycles prior, the price action broke the 618 after the halving. So many investors are believing that the bull market has already begun. Yeah. And not only has the bull market already begun, they believe we are at this point right here. However, on the other hand, a lot of individuals do believe that this is a mid-cycle top, just like we had in 2019. Both sets of individuals have valid arguments and have valid points. So, we're going to take a look at a couple of metrics. We're going to take a look at interest rates and we're going to take a look at the Bitcoin dominance. Firstly, let's take a look at the Bitcoin dominance, because the Bitcoin dominance is a tool that unlocks the secrets. Yeah, if you understand the Bitcoin dominance metric, you will be very successful within the cryptocurrency asset class. That's just a fact. When you dive deep into the cryptocurrency asset class, you will understand why the Bitcoin dominance is so significant. And you can also be successful in making a lot of money, because then you can understand Bitcoin in itself and why Bitcoin is so significant and why you should actually have Bitcoin in your portfolio. However, you will know when it's time to transition into the altcoins that will make you that lot more money. But let's take a look at the Bitcoin dominance. We will compare 2019 to 2020, as mentioned before, because that is what individuals are looking at most. We won't look at cycles before because we don't have much data point there with relation to Bitcoin dominance and interest rates and the macro, because with the Bitcoin dominance, you know, from before 2018, altcoins weren't really a thing, which is why you can see on the Bitcoin dominance chart, you have all of these squiggly lines uphill the way at 93%, because it was mainly just Bitcoin. But since 2017, you can see that we have a lot more data with relation to altcoins. And when it comes to interest rates, I'll quickly show you now. I mean, Bitcoin has lived the majority of its life in a loose monetary policy. From 2009 to 2015, interest rates were pretty much zero. And only last cycle, we had some sort of contraction in the economy. And now we have some contraction this time. Yeah. So we're going to look at interest rates and the Bitcoin dominance. But first, let's look at the Bitcoin dominance. So if we compare 2019 to 2020, where was the Bitcoin dominance? If we look at 2019, you can see that price peaked in June, July of 2019. Where was the Bitcoin dominance then? The Bitcoin dominance was right here. Yeah. Just before it peaked right here. Where was it in 2020? Well, individuals believe we are right here in the market, around that August 2020 timeframe or so. And I'd say both sides are wrong, because the peak in 2019 is way too early, because that was in the pre-halving year, whereas the individuals here, they're in like July, August of 2020, which is like 6 months down the line. So we are currently bang in the middle, because we are in February of the halving year. We are essentially at this point, right in the middle. Yeah. But where was we in 2020? Was right here. And where was the Bitcoin dominance? The Bitcoin dominance was right here. It took a massive dip right here. Yeah, can you see? So which one of those years do we currently resemble right now? And this is also confluent with a Fibonacci level, because if we do take a Fibonacci level of the Bitcoin dominance, last cycle you could see, it's not going to work like this. Okay, that's fine. That's fine. We can take a look at the Bitcoin dominance metric in itself, just very quickly. If we take a Fibonacci retracement from the top of last cycle till now, you can see that the Bitcoin dominance did go to the 618. So there's confluence with the Bitcoin dominance and the 618 ratio as well, because it tagged it twice before ultimately getting rejected. So the 618 is such an important tool, because if we take a look at the last peak and compare it to this cycle, you can say that the 618 is at 60%. So remember that 60%, right? Because currently we're at 53.92%. So if we go back to the chart and we overlay the Bitcoin dominance, in 2019, right here, we were right here, and the Bitcoin dominance chart did not peak out until a few months later. So you could suggest that we are currently in this 2019 phase, because one, the Bitcoin dominance is just shy of 54%, and the 618 is at 60%, which is right around here. Yeah. So you could suggest that we're likely rhyming with 2019, because the Bitcoin dominance still has a way to go with regards to the 618. On the other hand, 2020, the reason why the Bitcoin dominance fell is because after the halving, there's a lot more risk on, because Bitcoin leads the market. Bitcoin always leads the market, which is why we have this pump right here. Altcoins do not move unless Bitcoin moves. Yeah. Bitcoin is the one that leads the bull market. It leads the charge. If there's no Bitcoin movement, there's no altcoin movement. That's just the way it goes within the cryptocurrency asset class. Bitcoin needs to move in order for altcoins to move. But this stems from the macro environment, which is why we're going to look at interest rates as well. This chart's a lot cleaner now. But if we take a look, in 2019, where were we with regards to its mid-cycle top? We were right here. Yeah. And then in 2020, individuals that believe we are right here, where were we with regards to interest rates? Okay, so in 2019, we were in a contracting economy. You can see the economy was contracting right here. Whereas in 2020, we're at looser monetary policy. So which year does it also resemble again? It certainly favors 2019 because we are currently in a contracting economy just like we was in 2019. The first rate cut isn't expected until June of 2024 right now because of the recent inflation data. So, as we are currently in a contracting economy, it likely rhymes with 2019 and 2020 because 2020, we all know the pandemic occurred and then the Fed printed trillions and trillions and trillions of dollars to get themselves out of that recession. Yeah, do you understand? Okay, so the Bitcoin price peaked a month before the first rate cut. Yeah. And then it crashed on the last rate cut. And then we went into looser monetary policy and then Bitcoin went on its massive bull run. If we likely compare the two, the Bitcoin dominance and interest rates, you can see that the Bitcoin dominance did not peak until the second rate cut. You can see right here, the second rate cut, which is right here. So when we take a look at Bitcoin dominance and interest rates, a month before the first rate cut, Bitcoin price peaked and then dominance peaked 2 months after. Whereas in 2020, you can see that the Bitcoin dominance put in a low and we was in looser monetary policies. As we are comparing 2019 and 2020, you can compare the data with where we are at today. It will most likely be different from the past, but I will say this, because we are in a contracting economy as the UK has just technically entered a recession. I like to say this. In a risk-off environment, liquidity goes from high risk back to low risk. Hence why the Bitcoin dominance flew back up after the second rate cut. Because when rate cuts occur, people get scared because they know that there's something wrong with the economy. So, liquidity from altcoins will transition into Bitcoin. Hence why the Bitcoin dominance soared. Yeah? And just like in the stock market, where you have high risk stocks, penny stocks, the liquidity from those flow into the Magnificent 7, which is why the Magnificent 7 makes up a stupid amount of percentage of market share within the S&P 500. And it makes sense for cryptocurrency as well. So liquidity from the higher risk assets flow into the lower risk assets. And that occurs because investors lose confidence with the risk on attitude in the market. They lose confidence because they see that the economy is contracting. And they feel safer putting their money into lower risk assets. Yes, I know Bitcoin is a risk on asset, but when it comes to the asset class, Bitcoin is the safest investment. So it makes sense as to why the Bitcoin dominance still has room to grow. Identifying that trend, and it is duplicating the movement from 2019, where the dominance need to certainly rise, which is also confluent with the 618, which is at 60%, but that will not happen until the Bitcoin price peaks out a couple of months before. The first rate cut is expected to be in June, so we could expect the Bitcoin price to peak out in May, just after the halving, and then the Bitcoin dominance to peak out just after the halving, which also identifies with 2020 movement, and then altcoins will look to take over late halving year into the post-halving year. So, I hope you all enjoyed the video. If you did, make sure you hit that like button, make sure you hit that subscribe button, and as always, it's been your boy, J1 General. Thank you and goodbye.